Hi guys, welcome to our EnergySage live stream about interest rates. I'm Alix, one of our senior researchers here who focuses on financing, and today I'm going to talk to you about one of my favorite topics, which is interest rates and how they affect solar loans. So most of you probably saw that yesterday the Federal Reserve cut interest rates by 0.5 percentage point, which was a big deal because they haven't cut rates in 4 years. We'll go over a little background first. So in March 2020, the Fed cut rates to almost zero because of the coronavirus pandemic. And then they started raising them again 2 years ago, and they raised them 11 times. That made interest rates go to 2-decade highs, and that made borrowing money more expensive across the board for everyone. So whether it was a mortgage, a car loan, credit cards, or solar loans, it got more expensive to take out a loan and to borrow money to pay for big life purchases. So we will walk through an example of the average cost of a solar system and how an interest rate will affect you if you are interested in going solar. So about 85% of EnergySage shoppers take out loans to finance their solar purchases, and the average solar system that we see purchased is about $30,000. So if you need to take out a $30,000 loan, and an average loan term for solar is usually about 20 years, if you have a 4.75% interest rate, that means you're paying about $16,500 in interest. If you took out that same $30,000 loan at a 5.5% interest rate, you'd be paying $19,000 in interest, $19,500, excuse me. So that means that right off the bat, you're saving $3,000 in interest payments, even just from 0.5 percentage rate cut. So we can see right away that interest rates have a big impact on how much you pay for solar overall through the total cost of your loan. And so that obviously brings us to the next question, which is if rates are going to keep going down and they save us so much money, should we go solar now, or should we wait for 6 months or a year from now to invest in solar instead? And there's a few ways that you can think about that question. Yes, it's true, you will save more money when you have a lower interest rate no matter what, but you have to take into consideration the money that you're still spending on your electric bill every month while you're waiting for rates to go down. So if you have a $250 electric bill and you want to get rid of that right away, if you take out a loan and your loan payment is only $100 a month, which as long as you're working with a trusted lender and you take out the right type of loan for your personal financial situation, your loan should always typically be lower than your electric bill. That means that you're saving $150 a month. So over a year, that means you're saving right away already $1,000 or $1,500 on your electric bill. So if you don't wait and you invest now in solar, you're seeing that immediate savings right off the bat. And the other thing to take into account is, the Fed tells us what it's going to do, but we don't know if that's exactly what it's going to do until they actually lower the rates. So, for example, in yesterday's meeting, they said that they're going to lower rates another 0.5 percentage point before the end of the year. They have 2 more meetings before the end of the year. And while it's likely they're going to do that, it's never set in stone. So trying to time interest rates is sort of trying to time the stock market. It's not a good idea because you can never predict exactly what's going to happen. So if you wait for interest rates to go down, you're taking the risk that they might not go down as much as you think they will, or the Fed might hold them steady. And that's because we don't know what's going to happen with the economy at large. Things like the inflation rate and whether they feel like inflation is under control, or the strength of the job market and whether or not the unemployment rate is low are all factors that they think about before they actually commit to their decision. And so, I think that kind of explains most of the basics of what you need to think about when you are taking into consideration whether you should take out a loan now or later. It will always depend on your personal financial situation and the lender you're working with. But, you always want to talk to your lender and ask them questions and ask what your options are when you're taking out loans. So while it's not necessarily standard for most solar loans that you would be able to refinance it, that's something you should definitely ask your lender about. It's possible that that's something that they may offer, and then you would be in an even better situation because you'd be saving money now and you could refinance into a lower interest rate down the line. So if you can do something like that, that is usually ideal. And yeah, I think that we have some questions from you guys. We asked you guys to submit questions before, and we also have some live questions. So I will look at a few of these now. Okay, so someone asked, is now still a good time to invest in solar energy? And so, yes, the answer is yes. You're always saving off the bat right away as soon as you eliminate your electric bill. But it is possible as rates drop, you can save more money down the line. You really have to kind of sit and work out the math and see what the monthly savings are going to be for you and your specific solar, the solar system that you want. And we know also, right, it's not just your loan payment. What you're paying for solar is always going to depend on the cost of local electricity in your area, how much you use electricity every day in your house, the size of your roof and everything like that. Okay, someone else asked, how do dropping interest rates affect solar tax credits and other incentives? So interest rates don't directly affect things like tax credits. It just lowers the cost of your overall loan. So, if you apply for the federal solar tax credit, which allows you to claim 30% of your installation costs against your taxes, you're just saving more when you're, taking out those chunks of money, but it doesn't directly affect those things. Okay. And someone said, when is the next interest rate decision? So early November and mid-December are the last two Fed meetings of the year. The Fed meets 8 times a year. So that means also that resets in January, and there will be another 8 meetings in 2025. Okay. And someone else wants to know, are there alternative financing options available to help me go solar? So yes, if you don't think you want to take out a loan or you're not sure if a traditional loan is right for you, you can come to EnergySage.com/financing, and we have a wealth of information where we explain all of the different options and the pros and cons. You can take out a regular personal loan, you can take out a loan through a credit union, and if you're able, of course, paying upfront in cash is always going to be the cheapest way to do it because you don't have to pay any interest rates at all. Okay. And how do lower interest rates affect home equity loans and home equity lines of credit? So those are 2 types of ways that you can also pay for solar. Those are basically like taking out second mortgages on your house. So you can pull equity out of your house and your bank will give you cash in exchange for that equity. And those types of loans are directly impacted by interest rates because they're essentially mortgages. So if you're interested in paying for solar that way, those rates definitely will be cheaper and those loans will also be cheaper. And one of the benefits of taking out a home equity loan is that interest is also always tax deductible. So you kind of get a double benefit if you choose to finance that way. Okay. And someone said, 2 or 3 lenders that your experience has shown to have the lowest rates? That is a great question. We work with Atmos and Climate First Bank, and those are 2 banks that really strive to keep interest rates low for their customers and don't necessarily have high fees like origination fees or dealer fees, which can really bump up the cost of a loan. And so we like to refer customers to banks that have lower interest rates and keep fees as low as possible, because that is obviously the best way to go solar. And the less money you have to spend upfront, the faster your solar payback period is. And your payback period is the amount of time it takes to recoup your costs from your installation. So the faster that happens, the more you have pure savings from there on out. Okay, and so someone wants to know about signing solar leases. That's a good question. Signing a lease definitely can depend on your personal situation, but you can also think of that, sort of like leasing a car. Generally, ownership and being able to own your solar panels is always going to be a smarter financial investment. If you lease your panels, it means that you can't take advantage of things like the tax credits because you're not the owner of the system, so the company gets to take advantage of the tax credits. And you have to give the solar panels back at the end of your 20-year loan. But you're basically, if you take out a lease, you're essentially spending the same amount of money every month to pay for those panels, and then you don't get to keep them at the end of the 20 years. So if you can take out a loan instead of a lease, it's a better financial equation. You own the solar panels. It's easier if you're selling your house down the line, and it increases your home value. So we try to recommend loans over solar leases. Okay. I think that answers most of our questions from you guys today. It was really fun getting to answer all of this for you guys, and we'll probably do another one for the next interest rate cuts as they keep happening. You can come to EnergySage.com to learn more about our financing and check out our marketplace. And if you have any questions we didn't get to, you can DM us or send us a message. So thanks for tuning in, and we'll talk to you soon. Bye.